Morning, David, but it's a real mixed bag on University of Michigan. Now, remember, this is a final read. A couple weeks ago, we had the initial numbers, and there's been a lot of changes. The initial number for headline was 58.6. It moves down 4 basis points to 58.2. Wrong direction, sequentially lower, weakest since, well, just May of this year. But current conditions, exact opposite. 61.7 replaces 60.9, sequentially higher, best since July. Expectations, sequentially lower, and we lost ground from 57.5 to 55.2. So this, or 55.9, that would be the weakest since May. Now, here's where it gets interesting. If you look at the one-year inflation, on our last look, it was 4.9. It moved down to 4.8. And if you looked at the 5 to 10-year inflation, it went from 3.9 to 3.5, a fairly big jump. 3.5 would be the lowest just since July, but it underscores how wacky some of those inflation numbers were in this sentiment environment where respondents, of course, were affected by all the political issues of the day, liberation, and all the notions of fear over inflation from tariffs. It has settled back a bit, and it's one of the reasons I think interest rates are starting to slip a little bit. You now have 2-year and 3-year in positive territory with lower yields than their close yesterday. Carl, back to you.
All right, Rick, thank you very much. Rick